Richard Repetited, and I'm here today with Valeura Energy, just after they have announced record high reserves, longer asset life, and its third consecutive year of approximately 200% reserves replacement. To walk us through what this means and why it matters, I'm joined today by Dr. Greg Kulawski, Chief Operating Officer of Valeura Energy. Hello, Dr. Greg.
Hi, Kunal, and hello, everyone.
Okay, so on to the first question. Valeura has once again achieved a reserves replacement ratio of around 200% for the third year in a row. How do you manage to do this consistently?
Well, I think it really comes down to disciplined execution of our strategy across the portfolio. All right, so first of all, it's about successful conversion of contingent resources into proved and probable reserve. And I think the most notable example here is our final investment decision on Wasana redevelopment. And I think that's an example of how we're moving volumes and value from resources to reserves, right? Second, we've been extending the productive life of the assets, of the existing assets, particularly at Jasmine, through work on license extensions and field infrastructure life extensions. And then thirdly, but still importantly, we've continued to see good drilling results across the portfolio, adding volumes in all fields.
Thank you. And will you do it again in 2026?
That's a really good question, and we've actually heard this question a few times. We've now had a couple of years of delivering over 200% reserves replacement at the end of 23, at the end of 24. And so we are, however, cautious on promising a 200% continued reserves replacement into the future. We do know that the geology of the Gulf of Thailand has been actually delivering around 100% replacement for the basin as a whole. And in Valeura, we have been finding different ways each year to achieve almost double this amount. Now, there's always new drilling, but we've also been focused on reservoir engineering studies, field redevelopment work, finding satellite redevelopments, and also working on license extensions.
Okay, thank you. And well, this year's reserves numbers are the highest in the company's history. So what stands out most to you?
So a couple of things stand out. I think first of all, indeed, with 57.8 million barrels of 2P reserves, this is a record for us. At the same time, the after-tax net present value of these 2P reserves is nearly $700 million, despite a sharp reduction in forecast oil prices. And I think that tells us two things. First, our portfolio is robust. And second, the work we're doing to improve recovery, extend field life, lower unit cost, optimize development plans is genuinely creating value, not just adding volumes.
Okay, well, this year's reserves were assessed using a much lower oil price outlook than last year. So how did that affect the results?
Yeah, so this is indeed an important point. The reserves and value reported this year were evaluated using a forward price deck into the future that is materially lower than the one that was used at the year end 2024. So as a result, some volumes that would have qualified as reserves at the year end 24 price deck fall just below the economic threshold. Now, if oil prices and the forecast prices remained at the level we have seen at the year end 24, we estimate that our reserves replacement ratio would have been above 200% yet again, and our reserves life index would have been closer to 8 years. And also the net present asset value would have been materially higher than what we're reporting today. Now, the fact that we still have achieved a 192% reserves replacement ratio, a record 7.5 years reserve life index, and a near 700 million net present value under much lower price assumptions really underscores the resilience and quality of the portfolio.
Okay. Well, speaking of that, Valeura's reserves life index has increased to a new record of 7.5 years. Why is that an important metric?
Yeah, so the reserves life index is really about longevity of the portfolio and longevity of future cash flows. And so a higher index means the portfolio can generate cash for longer, which of course underpins sustainability of the business, ability to reinvest and return value to shareholders. And when we first started operating in Thailand about 3 years ago, a relatively short reserves life index was one of the key challenges we identified. It was around 3 years reserve life index. And so over the past 3 years, we've been working on this very deliberately. And so reaching now 7.5 years RLI on a 2P basis is really a tangible indication that the portfolio is stronger, longer lived, and really better positioned for the future than it was when we started.
Oh, Valeura's share price has increased significantly over the past in recent months. And is the company now fairly valued?
Well, first of all, I mean, we are very pleased with the support we have been receiving in the market. So it's good to see the recognition, and I think people see that Valeura has a strong gearing to Brent oil prices. But also, and I think quite importantly, our team here in Thailand have been continuing to deliver operationally on our promises. Now, back to share price and numbers, based on the year-end position, the net asset value of the total business, including the cash we've got in the bank, is around $1 billion US dollars, right? Which then, if you translate it into share price, comes out to around 13 Canadian dollars per share. Now, I think again it's important to say that first of all, this valuation does reflect the lower oil prices that we are seeing now, but also it assumes no further reserves replacement into the future, right? So it's just the value we see today, whereas we have been each year able to more than replace our produced reserves. So on that basis, I think I would see continued long-term upside value in the company.
I see. And beyond reserves, what should investors be watching for next?
Yeah, so I would probably say three things. First of all, contingent resources in our operated portfolio. They are important because they represent effectively the feedstock into the future reserves growth, and Wassana is a very good example of how we have progressed contingent resources through that pipeline and turn them into reserves and value. Now, second point, also very important, is the volumes and asset value that we are announcing today do not include the farm-in deal which we have signed with PTTEP on blocks G165 and G365 in the Gulf of Thailand. Now, we will be undertaking a full third-party reserves and resources evaluation of these blocks, and when the deal is formally approved by the government, we will be publishing these results. Now, we actually don't see any risk in ultimately receiving approval in Thailand for the deal, but there has been some delay due to the elections just coming up in Thailand, and so I think we just need to have a little bit of patience until that's released. But in the meantime, we continue working on these blocks together with our partner PTTEP, and we look forward to potential final investment decisions on gas developments already this year, right? And so we expect not only resource additions from G165 and G365, but also reserves additions. Now, and I think the final point is on further portfolio growth. We do have a very strong balance sheet, over 300 million in cash and no debt. And we continue to look for opportunities, and this balance sheet does give us flexibility to execute on value-accretive opportunities.
Okay. Thank you very much, Dr. Greg. And thank you everyone for tuning in on us.
Thank you.